Join me as I dive into the wild world of crypto and try to predict if we're really on the brink of a market explosion. The cryptocurrency market in mid-2025 is a landscape of profound contradictions. On one side of the ledger, we have forces that bulls could only have dreamed of just a few years ago. Trillions of dollars in institutional capital flooding into the market through regulated ETFs, a US administration actively championing the industry, and technological upgrades that are finally making blockchain networks faster and cheaper to use. Yet, on the other side, storm clouds are gathering. The global economy is teetering on the edge of a recession. Central banks are hesitant to lower interest rates, and a catastrophic security crisis is unfolding in plain sight. This sets up the central question for our investigation. It isn't simply, will the price go up? It's something more fundamental. Have the rules of the game changed for good? Is the smart money from Wall Street building a stable, permanent foundation for a new financial system? Or is it constructing a glittering skyscraper on technically fragile ground, vulnerable to the same macroeconomic shocks and systemic security flaws that have plagued the industry for over a decade? The total market capitalization of all cryptocurrencies is currently fluctuating between approximately $3.7 trillion and $3.97 trillion. This figure represents a monumental influx of capital, pushing the market's valuation toward and at times beyond the peak seen in previous bull cycles. Leading this charge is Bitcoin. As of July 2025, Bitcoin is consolidating in a price range between $115,000 and $120,000, having established a new all-time high of $123,218 earlier in the month. Its individual market capitalization now exceeds $2.3 trillion. Not far behind in terms of market influence is Ethereum, trading in a robust range of $3,700 to $3,900. Ethereum has demonstrated remarkable strength, in some periods even outperforming Bitcoin. This rally is largely fueled by the successful launch of its own spot ETFs, which have attracted immense institutional interest. The following table provides a clear, data-driven overview of the major players defining the market in mid-2025. The single greatest difference between this market cycle and all previous ones is the creation of a regulated, high-bandwidth bridge connecting the traditional financial world to the digital asset ecosystem. This bridge is the Spot Cryptocurrency Exchange Traded Fund. The numbers are staggering. In 1 week in July 2025, Ethereum ETFs saw net inflows of $2.2 billion, at times outpacing the demand for their Bitcoin counterparts. By mid-2025, BlackRock's iShares Bitcoin Trust had accumulated over 625,000 BTC. Publicly traded companies led by pioneers like MicroStrategy are increasingly adding Bitcoin to their corporate treasuries as a reserve asset, a strategy that effectively removes large quantities of BTC from the circulating supply. Perhaps the most potent symbol of this new era is the establishment of the U.S. Strategic Bitcoin Reserve. Through an executive order, the Trump administration has mandated that Bitcoin seized by law enforcement be consolidated into a national reserve rather than auctioned off. The environment has transformed from one of overt hostility and regulation by enforcement to one of active promotion and framework building. The Trump administration has explicitly vowed to end this war on crypto and make the United States the undisputed crypto capital of the world. The centerpiece of this new approach is the Guaranteed Essential National Infrastructure in U.S. Stablecoins Act. Signed into law on July 18, 2025, this landmark legislation provides the first-ever comprehensive federal framework for payment stablecoins. The bull case for 2025 argues that the underlying technology, particularly on the Ethereum network, is finally catching up to the hype. The core of this argument is the success of Layer 2 scaling solutions. The Dencun upgrade introduced blobs, which drastically reduced the cost for L2S to post data back to the main Ethereum chain. The result was a reduction in transaction fees by as much as 100-fold, often to mere cents. The cryptocurrency market has historically moved in predictable 4-year cycles tied to Bitcoin's halving events. The most recent halving took place in April 2024. If history is a guide, the market typically enters a powerful expansion phase in the 12 to 18 months that follow. This historical pattern underpins many of the bullish price forecasts from respected financial analysts and institutions. The International Monetary Fund has downgraded its growth forecast for the U.S. economy in 2025, and its models now indicate a 40% probability of a US recession. A recessionary environment is typically characterized by a risk-off sentiment. At the center of this macroeconomic uncertainty is the US Federal Reserve. The Fed is walking a tightrope, attempting to curb persistent inflation without tipping the economy into a full-blown recession. 2025 is on track to be the most devastating year in history for crypto-related theft. By the end of the first half of the year alone, over $2.17 billion in digital assets had been stolen through hacks, scams, and exploits. The $1.5 billion hack of the Bybit exchange in February 2025, widely attributed to the North Korean state-sponsored Lazarus Group, stands as the largest single crypto theft in history. No other multi-trillion-dollar asset class suffers from theft on this industrial scale. While the new regulatory clarity in the US is a clear positive, it is a double-edged sword. The Genius Act does not and cannot eliminate the inherent risks of stablecoins. A crisis of confidence could still trigger mass redemptions. A crucial distinction remains for retail users. Stablecoin balances are not protected by government deposit insurance like the FDIC. In the event of an issuer's failure, users could lose their entire investment. The central debate of the 2025 crypto market revolves around the thesis that this time is different. Historically, crypto market cycles were driven primarily by retail investor sentiment. The 2025 cycle presents a starkly different picture, one dominated by institutional capital. This shift has had several profound effects: dampened volatility, concentration on blue-chip assets, and altered price action. Bitcoin reached a new all-time high before the April 2024 halving event, driven almost entirely by the explosive launch of spot Bitcoin ETFs. Scenario A, the parabolic explosion. In this scenario, the bull case prevails decisively. The positive feedback loop between pro-crypto regulation and relentless institutional inflows proves to be the dominant force, driving Bitcoin's price toward $200,000 or more. Scenario B, the macro-driven correction. The macroeconomic headwinds prove too strong. A confirmed recession or geopolitical shock triggers a broad risk-off event, leading to a substantial market correction of perhaps 30 to 40% rather than the historical 80%. Scenario C, the new paradigm, the grind-up. The market avoids both wild euphoria and deep crash. Instead, powerful but conflicting forces create dynamic equilibrium, with price continuing to grind up in a more sustainable, less volatile uptrend. For those navigating this complex landscape, the critical metrics to watch are the bullish signal, continued strong net inflows into spot Bitcoin and Ethereum ETFs, the bearish signal, hawkish statements from the Federal Reserve or negative GDP reports, the black swan signal, another major hack exceeding $500 million. The crypto market stands at a historic crossroads. The forces of institutionalization and regulation are pushing it toward mainstream acceptance, while the specters of economic turmoil and systemic insecurity pull it back. Understanding this fundamental tension is the key to navigating the wild, unpredictable, and fascinating world of crypto in 2025 and beyond.